box, including your interest in specific industry, whether that's food, retail, healthcare, education. You can even go as micro as talking about a subcategory in that industry. Second, I would like to also understand bit in terms of your profile, your experience. If you are a professional looking to start a business for the first time, if you're a seasoned entrepreneur running already a franchise business or some form of business, and third is the city of your interest. So primarily these three things is something which I like to understand. Now, while you do that, I'll talk about what we do at the group level. So Franchise India, we today have a very strong team which is present in 97 cities in India. And also we are there operating in 19 countries globally. And in these years since 1999, we have worked very closely with our investor group, facilitating business buying for more than 10 million investors through our media business, which is a discovery platform for a lot of investors to see opportunities, speak to decision makers directly. And 1 million is where we have also worked directly, guided them through their decision-making process. And because investor centricity has been the core focus of Franchise India, we work with you to bring solutions that are based on a tried and tested process methodology that we have followed for the last 28 years to advise you an appropriate fitment of the opportunity. And today, Franchise India is also proud and humbled to have worked with this ever-growing community of aspirational entrepreneurs like yourself, which I would also accept today is a very evolved community as awareness on different brands, opportunities, brands have come a long way. But having said that, starting a business can be something which is always very challenging, and especially for the first-time business buyer who has no experience of starting a business. Your questions, your queries, your apprehensions, and fear of investment comparatively is higher. So what we have done is, we have created an assessment tool which helps you to analyze the pros and cons of the fitment. Now, the very big reason when people look at starting a business and franchising comes as a natural choice is because franchising is a very big impact market. Today, everything that we are consuming today, whether these are products or services which are being consumed, these all services, all products come from a franchise business. So today, globally, this is a $5 trillion industry, and India is the second largest franchise economy in the world. The last 10 years, the franchise industry in India has grown almost 4x. In the next 10 years, this growth will be 10x of what we have seen in the last 10 years. And like I said, India already the second largest market in the world after America. And the reasons are following. First and foremost, I would say consumption, which we all would agree is something which is driving franchising big time. 70% of India's GDP is driven by domestic consumption. And our consumption story is extremely interesting. It is very big. And this has what has also made the economy of India very, very resilient. So we have an extremely massive consumption engine. And second reason, not only consumption, but our consumption cycles are also changing, which means we are consuming more of what we are consuming maybe 10 or 15 years back. And this consumption has become more and more formal, or I would say more and more branded. So we as consumers have become more brand conscious. Brand consciousness, demand for branded product and services have actually grown in the last 20 years. And we all witnessed modernization of retail 22 years back. This time around, modernization of service industry, which is also becoming branded from laundry services to your home to D2C healthcare services. At our home to cleaning services to even a quick commerce services that we all use. These are all coming from a branded environment. Now, another reason which I also want to highlight today, franchising and consumption is very proportionate to each other, which means as our consumption would increase, the role, the contribution of franchising will also increase. The second thing, when we talk about India as an economy, India has a huge legacy of entrepreneurship, right? So which means franchising and entrepreneurship are also proportionate. Today, every home has somebody who wants to start a business. I'm sure, all of you out here, every day, in fact, there are a lot of webinars that are conducted by us. On an average, every webinar is attended by more than 100 aspiring entrepreneurs every single day. At Franchise India, we receive 100,000 inquiries every single month who are looking to start a business. So the demand for entrepreneurship in a nation like ours is very, very big. And being a shopkeeper nation, like I said, we have every home who has somebody who wants to start a business at some point of time in their life. So let us quickly start on the five assessment tools. This is something that we follow very, very rigorously and very, very consistently, irrespective of your timeline to start a business. Now, starting a business is something which is not easy, and building a successful one is something which I always say is always a bigger challenge. And so what we have done is we've created a five assessment tool for our entrepreneurs, which includes your own self-assessment. Second is the industry that you want to invest in. Third is the market assessment, which is micro market assessment of the location, the market where you want to start the business. And then comes the peer assessment, which is the competition assessment of similar brand, similar industry, which can be your market, national level, or maybe your city level. And finally comes the assessment of the brand that you have selected. So these are five assessment tools which we advise every business or I would say an entrepreneur, aspiring entrepreneur to consider before starting a business. Let's go on the next slide. So under these five assessment tools, we've also created a 25-point criteria. And if you have overall score on these 25 points, which is 20 plus, then the decision, your assessment on the business that you have selected is great. If it is anything between 15 to 20, it is good enough. But if your overall score on these 25 points is less than 15, then we do not advise you to go ahead with that opportunity. And this can be a combination of one or more assessment tools, which can be a market is not right for the industry that you have chosen. It could be a competition over the brand. So let me quickly go on to explain these assessment tools. Starting with self-assessment, I say this is the foundation for starting a successful, I would say, evaluation journey of what opportunities you should select. And some of the key aspects you should consider here, first and foremost, is to understand what entrepreneurship means to you, which is a lot of inner re-engineering, which is very important because successful business is not just about return on investment, but what value you as a business owner are building in the business, how you sustain the business, what problem is the business venture that you have selected is solving to the end consumer. So this is very, very important. Second is your overall goal alignment, which is alignment of your life goals with your financial goals. The alignment of these two goals is extremely important. Now, when I talk about my, assessment of financial goals, there are three things which are important to correlate and understand. First and foremost, important to know what is the timeline to achieve that financial goal. And different investments that we do, we have different goals. Some are immediate financial goals, some are mid-term, some are long-term investment goals. So what is the timeline for you to achieve the financial goal? Second is what is the risk as a entrepreneur, as an investor, you're willing to take in the venture that you want to invest. And third is the return that you expect on the investment. Now, when we talk about these three areas, now these three are very proportionate to each other. Let me give an example of different asset classes. Now, when I say different asset classes, these asset classes include passive investments and also include active investments like franchise business, which requires active involvement of an entrepreneur to run and operate the business. Now, different asset classes of investment that we make our investments in can only be categorized in three fundamental goals, which is safety, which means I want to put my money into an asset or into an instrument which is safe. Second is income. Third is growth. Now, when we look at our long-term goals or a midterm goal, so we also consider these three areas. So when I say safety is my goal to make an investment, I also, as an investor, telling myself, if I'm making an investment in a safe instrument, my returns on the investment are also low because as an investor, I'm not taking risk on the investment. Second is income, which means moderate risk and moderate return. And third is growth, which is high risk and high return businesses. So when we look at businesses which are active businesses like franchising and different models, formats, which companies offer to their franchise partners, depending on the stage of the business, or I would say, depending on the complexity of the business, which includes the operational complexity. Even the franchise business models, which are made by companies cater to these three fundamental goals. Then comes your capital planning, which means what kind of investment you want to put in the business. That extremely very important. And when you do capital planning, what you need to consider is your debt and equity ratio, which means what kind of savings or your own equity are you bringing in the business venture, and what percentage of debt are you planning to take. And the thumb rule we always follow is 50-50. So which means that 50% of your debt and 50% of equity should be put in the business. But if your overall investment is less than, I would say, 40 odd lakhs, I always advise that we put a bigger quantum of equity. At least 70% of your own equity you bring in the investment, and 30% can be a softer loan, because the cost of capital in India is extremely high. And when your cost of capital is high, your overall financial management of the business and cash flows becomes extremely challenging. And the second area, when you look at capital planning, you should not just look at the initial investment, but you should also have a runway for at least the first 6 months of operating expenses, which includes all expenses from salaries to the rent and other expenses for running a business. That should be kept aside. So here also we follow a 70-30 rule. If so, when I say 70% should be the initial investment, you should put aside, and 30% of that investment that you want to put should be kept aside as a working capital. Second comes the assessment of the industry. I always say not every performing industry is right for you. It can be right for someone, but may not be right for somebody else. So we need to conduct a deep research before we select industry or a subsector that we want to invest in. So we need to evaluate the overall trends in the industry, the life cycle of that industry, and evaluate some of the past performance, any recent disruptions that might have come in, any future shifts that we see are likely to happen in the industry, and what stage is that currently at, including is it at a emerging stage, is the industry at a growth stage, because at different stages of growth of the industry or the life cycle of that particular industry, the growth prospects, the return prospects are very, very different. Then we need to understand the overall fitment in terms of the next, I would say, 10 to 15 years. So every industry that you want to put has to have a long-term relevance, needs to be future fit, because all investments that we are doing, we're looking at future. So we need to look at if the industry overall is aligned to the long-term consumer behavior. We need to look at sustainability, how that has been built in the business model of that opportunity. Any kind of transformations, regulatory trends that we foresee are coming in. These are all important, I would say, dimensions that have to be considered when we select an industry. And then comes the assessment of the market, which means as an entrepreneur, I need to have go-to-market intelligence. Now, we need to look at the areas, which is largely how big is the addressable market, which I, as a business owner, want to address in the market where I want to operate the business. And second is I need to also look at the regulatory landscapes. So regulations around that industry, licenses, compliance, it can be liquor policy, it can be a drug license policy, a food policy, opening up a restaurant, a healthcare clinic. So different industries that we have. And these regulatory landscapes are both a state and a center subject. So what are the state guidelines and the regulations that are involved? Even the respective companies help you understand these, and at Franchise India, when we advise you, consult you, we also advise you on that. And finally comes the selection of the right real estate, the property. And this is one of the biggest reasons a lot of businesses fail or do well. The strategy that should always be followed, and this does not largely go wrong when we look at real estate, is you follow the leader in your market. So when I say leader, it may not always be the topmost player, but whatever brand that we have selected, you have selected, look at the closest competition to that brand and see what locations is that competition operating out of. So maybe you figure out there are two leading salon brands in your market. Look at the markets where they're operating, which locations, whether these are mall, high streets. And out of these locations where the brand is operating, see which are the top performing locations for that brand. And if you're able to find a property next to them, your probability of a successful business venture comparatively is high. And then comes the competition assessment, which includes the advantage that you have on the brand compared to other competition in the market. We need to look at areas including how the brand has performed, maybe in their home market and other markets. And this should be across different formats. If the company is operating different formats of franchising, that is very important. And these formats can be also different in different markets, which means how a great city versus a B grade city is performing. So look at the overall brand performance, look at the past performance of the competition and the brand which has been selected. Look at entry barriers. So entry barrier are, I would say, obstacles that make it difficult for any new company to enter a given market, which can include technology challenges, government regulations, any kind of licensing requirements. And finally, we need to even evaluate what the product offering and differentiation is amongst the various competition in the market. What is go-to-market strategy for the brand? Sometimes when the brand is new to the market, they offer very attractive terms to enter a given market. So you need to evaluate the value proposition, which can include the overall price points, the services, how a franchisee is helping their franchise partner to help them go to market and make it easy for their franchise partner to run the business. And finally comes your assessment of the brand. I always say not all franchisors are same. So as a business buyer, you have to do your own research, get to know everything about the brand, which includes things like the people who are behind the business, the leadership, the management of the company, the stakeholders in the business, and how the commitment of the brand has come the last few years. How standardized are systems and processes of the company? Because as the businesses begin to expand scale, they need to be more and more process oriented, because it makes a business reduce deviation. It makes it easy for a franchise partner to replicate. And more importantly, it helps you to perfect your customer service, which is extremely important in a business. And then to understand the overall margin structure. Now, the margin structure is very different, not only industry to industry, but even one category to the other. So if I say fashion, not every fashion brand might have the same margins. Every category, when you do that comparison, has to be done an apple to apple comparison. So what are the overall margins in the business? Compare them with similar brands in the industry. And then comes a return on the investment. Return on investment also is related to or proportionate to the life of that opportunity. Now, I'll explain that with an example. Typically, when we look at a long haul businesses, which are long horizon businesses, say businesses which we know are going to sustain, going to run for next 30, 40 years. So these are large jewelry groups like Tanishq, or I would say Aditya Birla Group, which has launched Indriya, or even fuel stations, so to say, or K-12 schools or super specialty hospitals. So if you look at their even five-star hotels. So if you look at the profile of their franchise partner, these are largely people who have stayed invested for many, many decades, right? So if your return on investment has to be proportionate to the horizon of the opportunity. Typically, the examples which I gave you, the industries I talked about, your return on investment is upwards of 5 to 8 years in these set of businesses. And for other businesses, which are largely, I would say, F&B or fashion, typically your return on investment is approximately 2.5 to 3 years time. And then comes the agreement. Now, in India, we follow a British contract. And so you have to understand the most important clauses in the agreement. And typically, when a franchise company develops these contract, there are two set of clauses. One is a flexible and the other is non-flexible. So flexible is where the company can be flexible to change to make it comfortable in terms of go to market for a franchise partner. And there are certain clauses which it does not negotiate on. So overall, there are 25 important areas in a legal contract that have to be considered. And we also at Franchise India has a team which is Fran Legal that also works with our franchise partners to help them vet these agreements and help these agreements to be negotiated with the company. So what we do is we follow a three-stage advisory process. If we can go on the next slide. Yeah. So one is exploration. This is stage one, and I call that also an information stage. Now, at this stage, we understand your own fitment, which is only unique to you as an investor, as an entrepreneur. And we look at the four primary fitments. And these four primary fitments include your strategic fitment. That means what you bring in the business outside the investment. It can be your experience, your qualification. It can be the property that you own where a particular business can be run. Second is the operational fitment, which means the number of hours that you have to put to run and operate the business, which is extremely important because 95% businesses in franchising are franchisee owned and franchisee operated. And out of these franchisee and franchisee operated businesses, the quantum of time involvement can vary from one industry to the other, depending on the complexity of operations and the different formats. Then comes the market assessment, which means what kind of businesses are relevant to the market where you want to open. So here we also do a competition analysis of competition in the market and we find a gap. So if I say these are the 5 leading brands already present there, which is a 6th brand that can open up in the market. Equally, we understand the rollout of companies for the market where you want to open the business. And finally comes the financial fitment, which, like I said, is a mix of or a combination of the investment you want to put and the working capital that you have to put in the business. So based on these 4 primary fitments, our team at Franchise India, our advisors, they go back to evaluate what opportunities are right to fit in these 4 primary fitments. And then we go to stage 2, which is evaluation of these opportunities, where we go a little deeper in terms of explaining these business models, unit economics of these businesses. We dive deeper with selected opportunities, organize discovery days, and do very in-depth brand sessions, including a visit to a few of the outlets, speaking to the existing franchise partners, doing direct meetings with the decision makers of these companies. And finally, once we have selected, it comes to the stage, which is negotiation and closure. A lot of personalization is involved here, which is customization, structuring of the deal. If you're a bigger area developer you want to take, so it's how do we plan the territory and how do we, plan the sharing of franchise fees and royalties. So that comes at a last stage. Now, when we, as Franchise India advisors, work with you as a throughout these 3 stages, typically the time frame, depending on the timeline that you have, can be anything from, I would say, 30 to 90 days on an average. But having said that, we don't bypass any of these 5 assessment tools I talked about. So this is not a random selection of opportunities. And I say at Franchise India, I work with 20,000 brands. And there are about 600 global companies that I work with, out of which there are 70 brands where Franchise India owns the master franchise right of these brands. But when I sit with you as an advisor, we understand what is the right fitment for you, what industry is right, and that's how we kind of narrow down the interest. Now, we only work with committed investors because the engagement that we have is very value driven, because a lot of inquiries, interest is received by us because that's very, very important that we specialize and we work with you to take an informed decision. So our process is designed to support you end to end, from discovering these opportunities based on the 4 fitments I talked about, and to evaluate these opportunities, help you negotiate and finally sign off the agreement. To maintain the seriousness of our work and effectiveness of our work, we only engage with our registered investors. And that registration reflects your seriousness and intent and equally allows us dedicate our time, our expertise, and resources to guide you through this high involvement process of selection of an opportunity. So friends, this is what I wanted to share with you today. We also have a webinar which is happening at 12 o'clock. So every day for the last 6 years, we bring you a brand new franchise opportunity, including Indian companies and also global brands which have entered into franchising for the very first time. So even if that industry is something that does not interest you or you've still not decided, I would still strongly urge that it is very important that you attend these webinars because it helps you to open your mind. It helps you to brainstorm opportunities and see what kind of business models companies operate. So I think Bharat's already shared the link of the webinar in the chat box. You can quickly copy that and register. So we start that exactly at 12 o'clock today. And if you want to subscribe to regular webinars, every day we have webinar that we bring in. There are approximately 3 to 4 business webinars, but 12 o'clock is the prime time that we do. So if you want to subscribe and want to receive regular updates, do reach out to us. We'll put you in our subscription list so that you get regular updates on these webinars. So thank you so much, friends, for being with us today. Have a great day ahead.
Thank you so much, ma'am. Thanks so much, ma'am. And in case if anyone would like to get in touch with us, I have already shared the number in the chat box, 9717 683-838, or you can also write to us at feedback@franchiseindia.in. That's how you can get in touch with us. I also have shared the YouTube link for Franchise India. You can also, subscribe this, and you will also get to know a lot of information about the brand and other information. So you can also subscribe that, but don't forget to join us on the webinar that we have at starting at 12 o'clock.
Right.
So please
So
copy
one more
that.
thing, friends, I want to share with you. Every weekend, Franchise India also organizes physical events, and depending on the city that you're based out, you can reach out to us to attend these events that we do. These are smaller micro events, which is represented by about 40 odd companies that come. Their decision makers come. You also will find our teams at these events. So I have a show which is happening this Sunday in Delhi. I'm doing this event in CP, which is the Sheraton Hotel. And we have another show which is next week. We're doing again at Sheraton in Bangalore. So every weekend there are about 2 events that are being conducted. So you can reach out to us if you want to attend any of these events, meet brand face to face, and also meet our teams. Thank you so much.